Thanks for joining us here on a Wednesday. I'm Marlon Bowling with you, and we're going to take a look at what to expect in our ag commodity trade here as we get things off and rolling on the futures market at the bottom of the hour. And as usual, let's call on Rich Nelson of Allendale Incorporated, and he's based in McHenry, Illinois, just outside the Chicago area there. So how are things this morning there, Rich?
Doing very well. Now, as far as us, we don't have any snow going on for this morning, so overall, not too bad. Clear skies and more moderate temperatures here.
Let's take a peek at our overnight trade. Let's go to the Globex market and see what the corn and soybean trade did overnight. Not a big move at all in the corn market, just a touch firmer. We have the March corn about 3/4 higher overnight. Last trade was quoted at 349. And if you look at the July, it was unchanged at 365, so no sense of direction there. On the soybean trade overnight, we'll take a look at that March contract, which was unchanged at 968. Boy, no direction there either. July up a half cent at 989.5. And let's move on to the wheat. Maybe there's something going on there. Not much. March Chicago wheat up a half at 417. July up 1/4 cent, one tick higher at 444. The entire trading range all night was only a penny. Let's look at the Kansas City market in our continuing quest to find something moving. March KC wheat up a penny and a quarter. Wow, that's the biggest move of anything so far. 423 and a quarter was the latest trade overnight. And July new crop up a penny and a quarter. Minneapolis wheat, here we have the March contract. Ooh, a penny and a half higher at 613, and July up a penny and a half. Looking at the cotton market overnight, here we have the March contract 14 points higher at 81.57 in our Globex trade. It seemed like yesterday the wild swings in the stock market kind of stole the thunder from everything else.
It certainly was. I think that's the biggest issue for us right now. And, of course, we're again higher this morning for the Dow Jones Industrial Average futures, so it does look to be that's the case for today as well. I think something people are kind of looking at maybe for the next discussion point is this U.S. dollar index. We've talked before about these problem export numbers on the grains, but perhaps this 10% year-over-year drop in the dollar that we're looking at right now, maybe that's something that the trade will start looking at here in the coming weeks.
All right, very good point there. Now, I wanted to bring up something, it's a little bit unusual, but I did see it cross the wire yesterday, and it was some new information that came out from USDA, and it's basically our final summary of last year's acreage, and it includes the failed acres and the prevented acres last year. Some folks are kind of intrigued by this. So let's take a look at this. On the corn, the actual planted acreage last year was 87.25 million acres. Of that, the number of acres that were failed, in other words, they were planted and left for the year, but they just didn't make a crop, 110,597. The prevented acres, in other words, they never could get it in the ground because of weather conditions or what have you, 964,000 acres last year. Upland cotton, we had planted 11.13 million acres. The failed acres were over 1 million, and prevented acres on the cotton were 115,500. Soybeans, 88.72 million acres were planted. Of that, we had 29,000 that were failed acres, and then on the prevented acres, 435,000 acres that never did get planted in the ground. And the wheat, there was a lot of concern about that last year. 42.4 million acres were planted. Failed acres, 805,000. That was a large chunk of it there. And then prevented acres, 619,685. That was directly from USDA. Did anything catch your attention on those numbers there, Rich?
You know, for the most part, nothing that got too far along here. Keep in mind, these numbers are issued each month starting in August. So we already got these numbers for December here, these most recent numbers. So in terms of the change versus the December, overall, nothing that's too far out of line. In fact, small increases, as we should be seeing for these collected numbers from the Risk Management Agency.
Okay, we'll come back in a moment, and let's take a look at what's going on in the livestock trade as we get set for a Wednesday trading session. Our guest is Rich Nelson, and we'll be right back. Let's go back to Rich Nelson of Allendale Incorporated, and let's talk about our livestock trade. And one thing that kind of leapt off the page when it comes to all the livestock trading activity yesterday, Rich, was the obvious factor that the lean hogs made a new contract high, and that has been surprising a lot of folks with the fact that they had that triple top. It sold off, it came back, took it out, as a lot of folks predicted, and then they wondered if it would continue on or if it would fail. And it acted like maybe it was going to fail after taking out those highs. But then we came back and made new contract highs again yesterday in that February contract. So the chart picture is looking a little bit different right now. What do you read into this?
I think we have probably a lot of concerns and questions right now about the NAFTA discussions here, and certainly for the hog side, where 24% of our product is exported each month. I think that's maybe a key discussion point. Latest kind of topics on the NAFTA discussion, well, we're just still waiting for the next round of talks to restart, and as it stands, no brand new news for the trade to kind of look at here for this today's discussion here.
Well, these are kind of lofty levels here on the lean hog trade. So when you look at that compared to what's going on here in the cattle market as we get deeper into 2018, which one do you think will have better success when we get further into the first quarter here seasonally? I mean, I'm talking seasonal tendencies here. Do you think the cattle tend to gain on the hogs or the other way around?
You know, usually hogs do have their big run-up around that mid-April to the summer period. So as far as the run-up between now and maybe that March-April timeframe, usually it is cattle. Now, we'll see about that this year, because USDA is calling for a large 10% year-over-year increase for second quarter beef supplies. That seems a little bit large and certainly much larger than our own numbers, but that will probably be a big question here for us. So normally, cattle is the one which gains from here into March-April here.
Well, nothing much going on yesterday in the cash cattle trade. In fact, there's nothing that you can establish a price trend, although I do have to say we did have a total volume of 12 that were sold in the country yesterday. That I was surprised they even mentioned that, but 12 heads sold yesterday. So obviously no market trend established in that regard there. Looks like asking prices are going to be around 122 to 123. That's fairly typical, I guess, isn't it, Rich? If they would come in $2 or $3 higher than what the actual selling price was the previous week.
I think that's exactly right. In fact, USDA did put last week's average cash cattle trade 119.92. For the most part, 120. So I think that's exactly right there.
Now, I do want to call attention to yesterday's afternoon update from USDA on the beef cutout values. And in this regard, we had the choice cuts yesterday. You could hear that backup beeper going off. It was down $2.45 at 205.58 on the choice cuts. And then selects went back under $200. They were priced at $199.89 per hundredweight, and they were down about $2.15 in value yesterday. That could take the wind out of the sails of some of these bulls in the cattle trade here today, couldn't it?
Certainly true. And this kind of weakness in mixed trade has been seen for the past 5 days or so for beef, and maybe it's now getting more serious than people thought it was. So that could provide a small amount of headwind for us to discuss here. Certainly true. Now,
what about on the pork carcass cutout values that came out yesterday afternoon? They were kind of all over the board, but it seemed like overall they tended to have a lower bias there. We had the cutout values actually going down 38 cents. About the only ones that were higher, we had the loin market up about $1.50, and we had the primal belly cuts about 48 cents higher. But all the others, for example, the primal butt category, they're down $4.59. We had picnic cuts down $2.79. They don't show up on this chart, but there was a lot of negative bias here on the wholesale pork trade yesterday.
It is, and this actually continues the trend here from recent days. Now, as a reminder, since the start of the year, we've added almost $11 to cash hog prices. Cash pork, though, only up about $2.50. So this kind of struggling and mixed and sloppy trade for pork certainly has been seen for some time, and maybe might give the packers a little second thought about their kill schedules these next couple of weeks here.
And to that end, the national live hog prices averaged about $1.92 higher yesterday, so that was interesting where the wholesale pork trade was going lower. Thank you, Rich. Good to talk with you again, and thanks for helping us kick off today's trade. Rich Nelson of Allendale. And Janet, there you go.
All right. Thanks
We're about
for
ready.
Kicking things off for us, Marlon.